in the course of the show. The put call ratio dropped to 0.9 vis-a-vis 1.05 in the previous session. Stocks that will remain in F&O ban are the likes of RBL Bank and Saman Capital. And in terms of fund flows, foreign investor selling has abated. But once again, we saw a figure of 1,500 crore rupees in terms of the FI net sell figure, while DII buying support continues at 3,661 crore rupees in equities in the cash market. On that note, bring on board Nilesh Jain of Centrum Broking to understand the setup for today and of course to take stock of all the stocks that will be in focus today. Nilesh, lovely chatting with you. Festivities have begun, but some bit of a snag when it comes to the up move that we had seen recently on the Lal Street. We clocked at 25,300 mark on the upside, 25,330, that's the swing high, but we also violated the 25,100 on the downside. Yesterday there was a fair bit of volatility. What is it? What is the setup looking like for today? And would you expect the momentum to resume after a 2-day gap?
Good morning, Nandita. Good morning, everyone. So first of all, if you see the markets, we have been witnessing a good momentum in last few trading session, all the way from 24,600. The Nifty reached the levels of 25,300. So close to 700 point rally we have seen. And in last three sessions, what we are witnessing is merely a consolidation. So that's kind of a healthy sign. Another positive development, I would say, in spite of a weakness that we saw yesterday, the Nifty managed to recoup its losses after taking support at its 21-day moving average that is placed at 25,060 odd levels. And that is acting as immediate support. So in fact, there are multiple supports in place, starting with 2550, followed by 25,000. There's a psychological support, as well as followed by 25,960. That's the 100-day moving average. So overall, we are not expecting any major crack from here. In fact, there could be possibility of a gap up or a positive start for the day. On the upside, I would rather wait for a breakout about 25,300 that will provide more confidence, because that's the strike where we have seen huge amount of call writing yesterday as well. So in the coming, if you look at the data of the coming weekly expiry, 25,300, 25,200, these were the strike yesterday where we have seen huge amount of call writing. So there could be possibility of a short covering rally, which will take Nifty towards 25,400 to 25,500. In the October series. So we continue to remain bullish on the market. Buy and decline should be the strategy. In fact, yesterday's dip was a very good opportunity in terms of making a fresh longs in the Nifty index. Coming to Bank Nifty, we have seen a bit of relative outperformance compared to the Nifty index. In fact, that has been a trend in last few trading sessions now. Overall, earlier it gave a good breakout from an inverse HNS pattern that was seen at 55,500. That was the neckline resistance, which will now act as a strong support zone for the Bank Nifty. So overall, we are expecting Bank Nifty to outperform the Nifty index in the October series. And from here, the immediate target that we are eyeing for is 57,000, followed by 57,600. Quite possible that we may see a new record high coming in the Bank Nifty in the October series. So overall, the structure for both Nifty and Bank Nifty continues to remain bullish. But if you see volatility index India weeks, which surged 10.5% this week in last two consecutive sessions, in fact. So that is something that one needs to watch out for. It needs to cool off below 11, then probably we can get more comfort in the market. But as of now, since it is at elevated levels, so caution is advised. But yes, buy and decline should be the strategy.
Okay, buy and decline should be the strategy, but you did say that in October series we could look at a fresh high when it comes to the Bank Nifty. Which are the stocks that could drive the Nifty Bank Index to hit a record high? From the private banking sector, we have Axis Bank kicking off the earnings season for this sector. Just very briefly taking you through the expectations, numbers are likely to be under pressure. Higher credit costs are likely to squeeze margins. Analysts are expecting slower loan growth as well, and there could be a mild uptick in the bad loans as well for the company. Both NII and profit are likely to see a decline, with NII dropping somewhere around 0.7%. That's what the money control poll is throwing up, and profit is likely to see a sharp decline of 14% on a year-on-year basis as well. Stock performance in the last 1 month, it has done fairly okay, almost 7% up. In tandem with how the Nifty Bank has managed to take the lead in comparison to the Nifty index. But what are your thoughts? ahead of earnings, how you positioned in Axis, and which of the private sector names could lead the Nifty Bank Index to record highs in October series?
Right, Nandita. So first of all, starting with Axis Bank, which will be coming out with the numbers. So ahead of that, it is facing a resistance at 1220. So 1220 is a very strong resistance for this particular counter. At the same time, 1120 is a very strong support. That's the 100-point tight range for the Axis Bank. And for those who are already holding the long position, can continue to stay put in this particular counter, keeping a stop loss below 1125. Overall, we are expecting a gradual upmove to continue in this particular counter. We also remain bullish on Axis Bank as well, but it is better to watch out for the numbers. If in case, if you see levels of 1150 or 1120 due to the market volatility, that can be a good entry point in terms of making a fresh entry. And as far as on the upside targets are concerned, 1250 to 1280 is something that we can expect going forward. Now, coming to which banks are looking positive as of now from the private sector bank. Kotak Mahindra Bank is something that is looking very strong on the chart, and we are expecting this particular counter to do well from here. 2200 to 2250. These are the target on the upside. 2100 is a very strong support. That should be the stop loss. Apart from that, index heavyweight counter HDFC Bank. That is also showing some bit of resilience, and we have seen a good bottoming out process in this particular counter at 940. 940 is a very strong support. That should be the stop loss. 1000 to 1020 or a fresh record high in HDFC Bank can be seen going forward. So again, a band decline should be the study in this particular counter as well. Now coming to PSU banks, you have already seen a very strong momentum in the counters like SBI, Can Bank, BOB. In fact, SBI has once again reached to its all-time high levels. It is trading near about those levels. So we are bullish on SBI as well for upside target of 900 to 920. And apart from that, Can Bank BOB continues to remain a preferred bet within PSU Bank. So overall, we believe that financial space is something that one should watch out for as far as October series is concerned.
All right, that's the view on the Nifty Bank Index and the Nifty PSU Bank Index, and of course how some of these stocks are likely to pan out. But let's take stock of the first ticks that are coming in. A positive one, we had reclaimed the 25,200 mark. We were bracing for a positive start, as was being indicated by the GIFT Nifty. All the global cues are mixed, but of course the commentary from the Fed chairperson in terms of rate cuts, that's something that could have spread some kind of cheer on Wall Street despite the ongoing trade tensions between US and China. But yes, a good start. Sensex up almost 200 points. The mid cap index outperforming at the current juncture, slightly so, but nevertheless, almost 0.4% kind of gain on the Nifty mid cap index. Breadth skewed in favor of gainers at the juncture. 2:1, that's the advanced decline ratio, but of course early days to call it a trend really. Yesterday as well, we started off on a good note when it comes to the breadth, but then it kind of reversed as we progress through the day. So we'll have to see how things really pan out and whether or not these trends will sustain or not. In terms of the sectoral movers, the Nifty Bank Index is up today. It's up 0.3%. 56,678 is where it's at. Heading towards 56,700. In terms of the other sectors, let's see which of the sectors are taking the lead. You have the PSU Bank Index that was the top laggard yesterday, has managed to take the lead today, up 0.5%. You have the Nifty Bank Index, as I mentioned, up almost 0.5%. FMCG, autos, realty, all of them are clocking in gains of 0.3% or thereabouts. Even metals and IT are participating. As of now, all the sectors are trading in the green. Slim gains, no big fireworks, so to say, in terms of sectoral movers, but nevertheless, the texture looks firmly in the green at the current juncture. Just want to see what a Persistent is doing. Reported good set of numbers, but there are concerns about valuation. The stock has rallied quite a bit. So that's why I think brokerages are still a little cautious, but the stock is up 3% as we speak. And in terms of the index movers, then let's take a look at which are the stocks that are making some waves in trade. That's Geo Financial, that's the top Nifty gainer, just about 1.5% gain on that counter. Bajaj Twins are doing well. In fact, Bajaj Finance is up 1%. You have Bajaj Finserv as well, that's doing well. Indigo, that stock is up 1%. L&T, Adani Twins, Shriram Finance, Bharat Electronics, Bharti Airtel, Trent, Bajaj Auto. These are some of the top movers. The list of losers is pretty slim this morning, which is a good thing. And that's being dominated by Titan. That stock is down 0.7%. Mind you, gold is continuing to hit record highs on a daily basis. In the futures market, gold, in fact, crossed that $4,200 per ounce mark as well. Tech Mahindra under some bit of a selling pressure. Numbers were fairly mixed. We'll discuss that in just a few minutes, but that's down 0.5%. And so is Axis Bank ahead of numbers. That's down somewhere around 0.3%. But in terms of the technology names, I want to get in your thoughts on a Tech Mahindra. Profits were marginally below expectations. They were up almost 5%. Revenues also rose somewhere around 5% or so on a quarter-to-quarter basis. Margins were higher at 12.1% vis-a-vis 11.1% in the previous quarter. Just going through some of the notes. I think Nomura has a buy call. The target price 1670. They say that Tech Mahindra Q2 performance was a good show on most parameters, and they are pretty impressed by the deal wins and the deal pipeline as well. And of course, the company is aiming for better growth going forward in FY26 and FY27. What did you do with tech names last week when the technology pack was buoyant? So far this week, we've seen a cool off. But last week, tech shares did fairly well. Mid-cap names like Persistent after numbers, would that look more appealing at the current juncture on charts, or would you look at some of these large cap names, given the fact that they have already seen quite a bit of a correction?
Well, absolutely, Nanta. You rightly pointed out. Last week we saw a good momentum, a spurt of over 2% in the Nifty IT index. So within that space, we continue to remain bullish on mid cap and small cap IT names. We have already seen a good set of numbers from the persistent system. TCL also came out with the numbers. Overall, if you see Nifty IT index as of now, after a sharp pullback from all the way from the levels of 33,500, it jumped to 35,500 levels. So almost 2000 point rally we have seen in the Nifty IT index. So there could be possibility of some bit of consolidation. But yes, at present level as well, I believe that there is a lot of potential in the Nifty IT space on the upside. So from a risk and reward perspective as well, these are the good levels to accumulate IT stocks. A couple of names just want to highlight. Coforge is something that is looking positive to me for the upside target of 1850. That's kind of positional target one can expect. And 1690 is a support for this particular stock. Coming to persistent system, although we have seen a good move yes, today, in fact, after numbers, so there can be seen a gap up opening, but overall the structure still looks strong for 5,800 to 6,000 levels on the upside. So buy and decline should be the strategy since already we have seen a spurt of over 5%. The risk and reward is not looking attractive at present level, but yes, if at all you see any dip below 5,600, that can be used as a buying opportunity, keeping a stop loss below 5,400. Target, as mentioned, 5,800 and 6,000 on from a short-term perspective. Apart from that, another stock that's SCL Tech that is looking good to accumulate. But these are the stock ideas that one should accumulate for little positional perspective. One can expect, in the medium term, the kind of return that we are expecting is in the range of 5 to 10%.
Okay, that's the view. Those are the kind of returns to expect, but some of the mid-cap IT names, the risk reward may not be looking that attractive, but of course you can look at buying on dips. That's the call. But another one that's been buzzing on the back of numbers is ICICI Lombard. The stock has shot up, above, rallying 5% or so. Numbers came out and they look pretty strong. Combined ratio came in at 105, 105.1%. vis-a-vis 104.5%. Total income was also up in double digits. You have net profit almost up 20%, gross premium gaining 1.5%. The stock has been doing fairly okay. It has been in an uptrend, a steady uptrend, no big moves as such, but the uptrend is intact. So what is the kind of level you'll be watching out for on an immediate basis? And is 2000 on the charts on cards anytime soon?
So Nanta, first of all, if you can pull up last 6 months chart, you can clearly see the stock was in a formation of a lower top and low bottom. Now today's move has negated that bearish setup and looks like we may see a follow up on the upside. Immediate level on the upside could be 2000. but we are expecting a move towards 2050 as well as a positional target. So at present level, again, after a 5% spurt, not advisable to chase. But yes, if somebody is already holding the long position, should ride this momentum up to 2000 on a very immediate basis. Quite possible that we may see in a day or two. But look for 2050 kind of target. Keep a trailing stop loss at 1900. That's the today's low, somewhere around that level. One can keep a stop loss. Structure looks positive.
Okay, that's about ICICI Lombard. But let's shift focus to our viewer queries then. On that note, there are a couple of queries on the recent listings, which I'm sure Nilesh, won't be the right person to answer, given the fact that there is very limited data for him to do so. But in any case, LG, after the blockbuster Dhamaka debut ahead of Diwali, any thoughts there? I know you don't have much data to go by, but what does it look like?
So Naita, first of all, as you mentioned, we don't have data on technical front, but yes, on fundamental side, we came out with a note for upside target of 1800. That's our target on fundamental side for this particular counter. Overall, looks good. We have seen a bumper
Hmm.
listing, but the good part is that after that bumper listing, the stock did not give away the gains. It is still sustaining well above its 1700 mark. So a follow-up move from a short-term trading perspective, if somebody is eyeing to keep this stock, if got it in the IPO, then keep a trailing stop loss at 1670, and on the upside the momentum can be seen towards 1750 to 1800. So 1800 is our institutional target for this particular counter.
Okay, 1800 on the upside, that's the target. That was a query from Naveen. Um, you've already made 46% profit, so congratulations on that. But keep 1800 rupees as a target on the upside. But let's focus in on the next query then. This one's coming in from Amit Kumar Srivastav, wants to know your thoughts on Oswal pumps. I was just going through the charts of an Oswal pump. It saw good gains in the last 6 months, but it has a reversed course, and last 2.5 odd months, it has come off 15%. And last month as well, it has lost 10%. But in the last 5 sessions, it was trying to make some kind of feeble recovery. At 738, would you advise looking at a Motilal, I beg your pardon, Oswal pumps, or would you say it's an avoid?
See, if somebody is looking to make a fresh entry, then it's an avoid, because if you see the stock made a high in the month of August, somewhere around 880, 885, and soon after that, we are constantly witnessing a lower top and lower bottom formation. So there are no strong rebound yet. If somebody is already holding the long position, can keep a stop loss at 720. But for fresh entry, it's an avoid till time it doesn't take out 800 levels on the upside. We are not recommending buy in this particular counter. There may be possibility of some bit of consolidation to continue.
Expect more consolidation to continue. That's the view on an Oswal pumps. I hope that has answered your query. There's another query that I spotted on the feed that's come in on a GNA Axel. Don't really get the person's name here. Uh, the person is holding 100 shares of GNA Axel at 496 rupees. Wants to know whether it should be averaged at current levels, or should they exit with a loss. The stock is at 305. The buy price is quite steep at 496. What would you advise?
See, Nanta, if possible, then I would request to pull up last 5 year chart of this particular counter. You can clearly see there was a double top pattern at 550. That was a strong resistance zone. And from those levels, we have seen a continuation of a correction. And still, there are no signs of any sort of bottoming out in this particular counter. So, structure is still looking weak. No point averaging out your existing long position, because the short term structure still looks weak till the time it doesn't take out 340 levels on the upside. So overall, the structure is indicating that whatever pullback, if you get towards 330, 340, that might get sold into. So exit on pullback should be the strategy. If bought it from a short to medium term perspective, if bought it from a longer term perspective, that's a different story. But yes, from a technical perspective, short term structure is looking weak. If it breaks below 290 level, then it's an kind of a structured breakdown. Then probably you can drag further towards 280 to 250 as well.
Okay, that's the view and that's the advice on GNA Axles. Hope that helped you. But let's take up a query on Akum drugs then. This one's coming in from Satvika Ranganathan. The Akum drugs, of course, has seen quite a bit of a shave off. The stock is in fact closer to its 52-week lows. But last 5 sessions, we did see some kind of attempt of a feeble comeback by the stock. How should one approach this one?
See again, it got listed in the year 2024, and if you see the data, I would request the PCR team to flash the chart of last 1.5 year. You can clearly see the stock has been in a declining trend, constantly sliding. Whatever pullback in between we got that got sold into. So structure is hinting that there could be possibility of another leg on the lower side, which may take this counter towards 450, 440 as well. So till the time it doesn't take out 500 level on the upside, there could be possibility of selling pressure at the high level. So not advisable to buy from a short-term perspective. From a positional perspective, somebody has already bought into this particular counter, then keep a stick stop loss at 437. And if you get any pullback towards 480 to 500, use that pullback to exit. So that's the view from a short-term perspective.
Okay, that's the view on Akum drugs on a short-term basis. But there is a query from Manish Kumar, Manish Verma, I beg your pardon, on Cera sanitary ware, and how is it looking like with a long-term perspective? Is it a buy? The stock is extremely flat. Last month as well hasn't really seen any kind of fireworks. Um, Anything to do here in terms of taking action? Should it be a buy or is it an avoid?
See, it's an avoid because the stock is constantly facing resistance, and we have seen a lot of consolidation. If you see current market price, there's somewhere around 6,090. It's at the same price that was at in the year 2021. So in last 4 year, we haven't seen any return in this particular counter. So it's an avoid from a short to medium term perspective. But yes, for a longer term perspective, if you get any dip towards 5,500 or 5,000. That probably can be a good entry point, keeping a stop loss below 4,600. Then probably long-term play could be back into the action. But as of now, short to medium-term structure is hinting that there could be possibility of another leg on the lower side.
Okay, there could be a possibility of another leg on the lower side, which is why it's an avoid. Uh, Manish, hope that answers your query. But let's take up some other queries then. This one's coming in from the metal, on the metal space. Tata Steel in particular from Geethu Sandesh wants to know whether it's a good buy for the long term. Tata Steel, of course, we know that steel counters, metals have seen a good, run. Even at a time when the markets were witnessing a correction, metals were, perched on firm ground. Some of these steel names have already hit 52-week highs as well. At these levels, is Tata Steel looking like a buy?
Absolutely, Anahita, as you have rightly pointed out, we have seen a strong momentum across all metal counter, but at present level, there could be possibility of some bit of time-wise correction because price-wise action we have already seen a very good spurt in a very quick time. So I won't recommend or suggest to buy Tata Steel at current market price. But yes, it's a good stock to be into the portfolio for upside target of 200 plus from a positional perspective. But ideal entry point should be somewhere around 165 to 160. If at all you get those levels, that can be a good entry point. Or another approach could be to buy in a staggered manner. Positionally, next 1 year or 1.5 year kind of time frame, I won't be surprised if these stocks move beyond 200 and test 230, 250 levels on the upside. So we continue to remain bullish on metal space, and our preferred bets are JSPL, Hindalco, Nalco from aluminum space, and yes, Tata Steel as well, but not at current level on declines.
Okay, buy on declines, that's the call on a Tata Steel. Focus on the next query then. Coming in from Pooja Khanna on EPL, I think she holds at 225. What should be the exit price? Now, EPL is at 207.6 right now. So, she's making some bit of a loss here and the stock has, been stuck in a downtrend Although last 6 months it did manage to stage some kind of recovery, but again it slipped into the red. If you look at the last couple of months, uh, exit wise, should she wait more? Could she at least break even at any point in time?
See, first of all, if you see last 5, 6 years, the stock has stuck in a very tight range on the upside. 280 has acted as a very strong resistance. That's a kind of a double top. And at the same time, it has found a very strong support at 140 levels. Currently, exactly, it is trading in between that particular range. But immediate trend is indicating that there could be possibility of a further downtick in this particular counter towards 195 to 190 as well. So structure appears to be on a weaker side. Sell on rise should be the strategy. If you get any pullback towards 220, 225,
Hmm.
use that pullback to exit from this particular counter because the short-term structure is looking weak. Just in case if it breaks above 225, then probably we can expect a pullback move to continue towards 240 to 250. But as of now, there are no signs of any reversal. It's an avoid taking any fresh entry if already holding and wants to continue to remain long, then keep a stick stop loss at 203.
Okay, 213, that should be a strict stop loss. Hope that answers your query. Two, three more queries then, since they are on the feed, I'm going to quickly get them addressed. There's a query from Pannu Anil on GRSC, and there is one from the shipyard space. Nana Prakasam wants to know your thoughts on Cochin Shipyard, whether it's the right time to enter. How are these shipyard stocks looking now?
See, short-term structure appears more sort of a sideways. We have seen a lot of consolidation. It looks like the consolidation is likely to continue. So 2400 is a very strong support for GRSC. From a trading perspective, there are no clear trend as of now. Looks sideways. 2800 is a resistance, so that's the zone as of now. We are not advising any sort of a fresh entry to be taken at this current market price. Coming to Cochin Shipyard, looks better placed than the GRSC and a gradual up move is something that one can expect towards 2000 2100. But the view should be taken from a positional perspective, let's say 6 to 8 months kind of time frame if somebody is having, then yes, this counter can be added in the portfolio keeping a stop loss below 1600.
Okay, that's the view on some of these ship building names. Hope that answers your query. And now let's take up queries from our regular viewers as well. Let's not forget them. One query from Debu K on Pirimal Pharma wants to know the immediate support level. The stock has been in a downtrend. It's at 193 or so. But what should be the immediate stop loss here?
See, very immediate stop loss should be at 188. If it breaks below 188, then the next major support that will come somewhere around 182. So these are the two important support to watch out for. But the major structure is looking slightly on a weaker side from a short-term trading perspective. If you are looking to make a fresh entry, it's an avoid. If already holding, then keep a stop loss at 188.
Okay, 188, that's the stop loss to watch out for. Hope that answers your query, Debu K. Last query for the day coming in from Satya CK wants to know your thoughts on MGL, Mahanagar Gas. Is it worth it adding for long term? In fact, is it worth adding for the long term, or should he average at the current juncture? What would you advise?
See, it's a good stock, no doubt, from a positional perspective. Technically, if you see a short-term trend, then it looks more sort of a sideways. If you want to time this particular counter, then I would advise to better wait for a breakout about 1360. That will give you a confirmation of a short-term trend reversal. But as of now, looks more sort of a sideways. From a longer-term perspective, yes, these are the good levels to accumulate. But keeping in mind that there could be possibility of another leg on the lower side, which will take this counter towards the 1250, 1200 as well. So whatever dip you get can be used as a buying opportunity, but time horizon should be more than 1 year if you want to, stay put in this particular counter.
Okay, that's the view on Mahanagar Gas. With that, we've come to the end of the query segment. If you couldn't take up your query, don't get disheartened. Keep them coming in. We'll try and get them addressed the next day. But with that, Nilesh, would like to thank you. But before I let you go, first, your recommendations for the week and any Muhurat trading picks that you would like to share with our viewers.
Absolutely, Nanta. So first of all, from a trading perspective, as mentioned, mid cap and small cap ITs are looking positive. So Coforge is something that one can look for upside target of 1800 plus, keeping a stop loss below 1690. This particular counter can be bought. So Coforge is a buy. Apart from that, another stock that is looking positive is Granules. So both from a positional perspective as well as from a short-term trading perspective, Granules is something that is looking attractive at current level given the kind of a setup that you can see. A big rounding bottom is shaping up in this particular counter. So looks positive for 600, 610 from a short-term perspective. And from a positional perspective as well, this stock has a potential to test 680 to 700 levels on the upside. So 555 should be the stop loss. Now coming to a Diwali peak, see, we came out with a Diwali peak on Bajaj Auto, this particular stock, because if you see Nifty Auto Index has given a good momentum all the way from 24,000, 27,500 kind of levels we have seen in a very short term time frame. But this particular counter was been a laggard kind of structure we have seen. But now looks like the stock has bottomed out. It has reclaimed all long term and short term moving averages. Risk and reward is also looking attractive. We have seen a buy crossover in MACD and RSI as well. So watch out for Bajaj Auto. Positional target comes around 11,000. That's next 1 year target. And the short term target could be somewhere around 9,600 to 10,000. Stop loss should be placed at 8,500. That should be the stop loss.
All right, Bajaj Auto Muhurat trading pick from Nilesh. With that, Nilesh, would like to thank you for taking out time and joining in this morning. Wishing you and the entire team at Centrum a very, very happy Diwali and a prosperous new year ahead. Wish you a very profitable summer 2082.
Thank you, Nandita. Wish you the same. Wish you all the viewers, entire team of Money Control a very happy Diwali and a happy New Year in advance.
Thank you so much. Well, with that, of course, we will shift focus to the market before we come to our special Diwali segment. That's Dhamakedar Diwali stocks. We'll get your new expert with top 3 stocks for the new Samvat. But before that, take a look at the market. We have, picked up steam firmly above that 25,200 mark. The mid-cap index is also outperforming at the current juncture. That's up almost 0.7%. The breadth is firmly skewed in favor of gainers, but the Nifty Bank Index has given up some gains, pared its gains. Now just about 50 odd points up, 56,500. It's holding on to that level, but there is a fair